What's going on, guys? It's GBP baby. Welcome back to another weekly review. Today's episode is going to be quite in depth. We're going to be looking at the commitment of traders. If you don't know what that is, simply type into YouTube commitment of traders, ICT. He does go through this on his mentorship. It is in his later episodes, I believe, when he talks about commitment of traders. Also in his recent videos on his price action models and things, he's been mentioning the use of the commitment of traders. So we are going to actually be looking at them. We're going to be looking at Dixie's commitment of traders, and we're going to see how this can play into our bias for the oncoming week. So I've actually got it brought up here, and what I'm going to do is I'm going to run through how we go about getting it up. So if you come to barchart.com and put in whatever and go into whatever currency or whatever market you want, you simply bring it up, and then you click on plus study and you look for commitment of traders, which is right here. Now, I'm not going to explain what ICT explains in his videos, but basically you want, well, let me just show you what I just did there, because you're probably going to be confused. There's commercials, large and small speculation. We want only the commercials. We don't care about large and small. We just want to see what commercial is interested in. Now, typically, the retail and basic understanding of what commitment of traders is that if we are low, like if there's a zero level here, basically there's a zero level right here. This middle line is a zero level. The idea, generally speaking, like from retail perspective, is that below the zero level, that means that the commercials are bearish, and above, that means that they're bullish. But clearly that doesn't make any sense when you can see that all throughout these months here, through July 23 right through to September 23, dollar was clearly bullish. However, the commitment of traders was still below that zero level. So that's where this fails with a retail perspective. How ICT teaches it is that he splits it in half. So like he doesn't split it in half, sorry. He finds the highest high of the last 12 months and the lowest low of the last 12 months, and then draws a zero level in the middle. And then when it's above the zero level, it suggests bullishness. And when it's below, it suggests bearishness. So what I'm going to do is I'm going to just bring this chart. I'm going to make it more clear for us, and I'm going to copy it onto our trading view chart so that we can have a better look. So here we are. We have the commitment of traders below here, and we have the dollar chart here. We're going to just ignore all of that for now so that we just have a blank canvas, and we're going to be doing exactly what I explained. So what ICT says, what ICT suggests to do is draw out the low of the commitment of traders report. Hopefully that will stay above. We'll make that thick. We'll make that black, and that should stay on top. Beautiful. And then we want the high of the previous 12 months. Now I'm not going to include Jan, so the high is, generally speaking, it's here, isn't it? And then we're also going to mark out the midpoint of that range. So to get the midpoint, I'll just use a Fibonacci, very simple. We can drag that right through the middle. We'll make the midpoint. We can make all of them a little bit thinner, to be honest. Not really too much of a problem. And then you'll see now we have another defined range. And what I see suggesting is that when it's above that level, above that 50% level, it suggests that they're bullish. And when it's below, we're bearish. So let's see how that plays a role. For example, here, when we turn bullish, you can see that dollar was crossing over that midpoint here. And then from then on, as we moved higher on the commitment of traders, you can see they were bullish, and they continue to stay bullish right up until this point. Now, what's interesting is that it was just between September and October where we crossed back below that midpoint level, this level here. That was done just between September and October, and that suggests here is where they started to be bearish on dollar. Now you'll see that there was still a little bit of a rally, even though we were below that level. However, eventually we made a high, and ever since we've been bearish. Now again, what do we see? We see another crossing off that same level and running right into the highs of the commitment of traders right here. So we're running into that right now, which is interesting, suggesting again that we should start being bullish on dollar. So this is going to apply to my bias now for the oncoming weeks, and we'll have to see how it plays out. I've never actually used the commitment of traders, so it's going to be interesting to see with you guys and take you on a journey to see how it works and whether it does work. But anyway, between December and Jan, you can see that through December is when the commercial started buying and suggesting, you know, that they're bullish on dollar, even though you were making a lower low, trading down into, looks like we traded down into a bullish order block, and then we've had a recent turn just as January started, and we are still above that 50% level. So what does that mean moving forward? Well, it means that technically we should be expecting or anticipating some kind of bullish bias. So based off this perspective, and not only based off that, but with that in mind, I'm now going to start to apply that to my analysis moving forward. So let's get rid of everything on here. And let's get straight into the chart. So we're going to start on the weekly. Actually, let's go to the daily. And then on the daily, we can see that we traded down into that bullish order block here that we were just talking about on the commitment of traders. And then you can see we've had that reaction. So last week, my bias was bearish. And that's because I wanted to see a bearish month in January. However, now after looking at that and after seeing how heavily consolidated we are, I am going to start looking at potential bullish, bullish forecasting. And the reason for that, again, if we were bearish, as far as I'm concerned, we shouldn't be spending this much time in a premium. And when I say a premium, when we look at this range from this high to this low, you'll see that we're at that 50% level, and you'll see how much time we're spending stabbing into it. So if we were to be bearish, I wouldn't want to see price spending much time up here. I'd expect it to have turned around by now. However, we spent the entire week just consolidating very heavily at this level. So that's one thing that's putting me off being bearish. And another thing is this fair value gap. Now, if we are bullish, this fair value gap should provide support. But first, let's drop down to the weekly and just draw out some PD arrays. So first, we have a fair value gap that's now formed here. We can draw that out. And if we are bullish, then this should start providing support in the new week, meaning that if price does manage to trade down into this level, we should see it act as support and, you know, use that to push price higher. So what I'm going to do is I'm going to write weekly fair value gap. I hope you guys are following along. Don't forget to smash the subscribe button. Did you know 60% of you guys are not subscribed to my channel, even though you're watching my videos? Very interesting. So anyway, we have a weekly fair value gap here. What kind of bullish PD arrays do we have if we are to be bullish? Well, we have these beautiful relative equal highs all the way up here. So we can draw them out. Let's use array. I prefer array. And that's buy side liquidity and relative equal highs. And we'll leave that like that. And then we also have this bearish order block here that we have traded to. Well, we've traded to the wick of, but we do have a bearish order block, so we should definitely have that marked out on our charts, a weekly bearish order block, because it's likely we're going to find resistance as we trade through that. But if we are bullish, then price should, you know, use that. It should be able to trade through it quite comfortably, so we'll see. And then we obviously have this swing high here, but I'm not going to actually, let's mark that out as buy side liquidity, like so. So now we have a few levels marked out. We also have this fair value gap here. I'm not going to draw that out because I don't want my charts too busy, but this fair value gap is obviously here, and I'd like to think that price would want to trade and start pushing into that and above this sell side buy side liquidity to fill in this imbalance. So let's drop down to the daily, and now we can have a better look. On the daily, again, that weekly fair value gap that's been formed, price can dip down into it, and it probably and likely will, because there's going to be stops residing below these relative equal lows. However, if we are bullish, then this should provide support, as I said, in order to push into that buy side liquidity and fill the imbalance, potentially running up to this buy side liquidity. Now, I'm not saying this is all going to happen in 1 week. It probably won't. But in terms of range, on the daily, you'll see that the high of the imbalance, remember on the weekly, we have this imbalance from this high to this high. I'm just going to mark it out for reference. Once we drop down to the daily, you'll see that that's this low here. But on the daily, you'll see that the imbalance is here. So downside delivery there was only downside delivery from this point. So in terms of the new week, if we're bullish, I'd like to think that we can create the low and work our way up into this buy side liquidity and trade up into closing the fair value gap here, whilst also trading into this bearish order block. So I'm going to draw this level out. I'm going to use this one though, and that's because it's a bearish order block and it's a breakout. We have a high, a low, a higher high, and then we break lower. So this down candle, the last down close candle, this is technically a breaker. So price is going to want to start to draw into that. So let's get this all drawn out and explained. We have a daily bearish order block here. Put that in the middle. Let's make it caps. And now we have a few targets. So we have the relative equal highs up here that we're likely not going to reach this week. We have buy side liquidity above this swing high, and we also have a daily bearish order block that's likely that I would like to see price, you know, turn around at or find its reach its, what do you call it? I see this as a target basically. Now this weekly bearish order block, since that's fine. Let's go down to the 4 hour. This is the lowest time frame I'm going on dollar because we'll do a lot more analysis in the other currencies. So again, buy side liquidity, weekly bearish order block, daily bearish order block, and again another imbalance that we can see. So there's 3 different time frames, all in high time frames where there's an imbalance. We have the weekly with a clear imbalance that needs to be filled. We have a daily with a clear imbalance that needs to be filled, and we have a 4 hour with a clear imbalance that wants to be filled. Another thing, we've taken out this little swing high here. So this buy side liquidity has been tagged. Once we took out that buy side liquidity, it does suggest bullishness because, you know, we're taking out highs. So it wouldn't be surprising to me if that was an indication, or it's opening its hands to potential for us to run into this imbalance that we have residing here. So overall, what am I expecting for the week? Obviously, I'm going to let Monday trade, especially out of this consolidation. Because of how heavy this consolidation is, I don't really want to be touching the charts at all until, you know, we have some actual proper movement. But what I'd like to see, I'd like to think that we can make the low, potentially dipping down below these relative equal lows, and then start running up towards this buy side liquidity with aggression. Like I want to see expansive candles. For example, on Tuesday, it'd be nice to see some kind of reversal or you know, push higher. But obviously we'll see how Monday trades. What I am going to do is I am going to get rid of this weekly bearish order block level, and that's because the daily level seems more appropriate for us to aim for, considering the buy side liquidity is here and we have this 4 hour imbalance that needs to get traded into. So let's just make this one thicker, like so. And I'll make that one triple, I'll make this one double, and we'll make this one blue as well. And then we'll keep that one as is. So yeah, I'm going to keep my charts like this, keep them as clean as possible. Another thing to take note, yeah, not really much. Again, let's say price does break down through this weekly fair value gap. So if price aggressively traded lower, for example, and traded through the weekly fair value gap, I'd then expect this to provide resistance and push dollar down into these lows here. However, if it provides support, then at least we have our targets for the buy side liquidity here, and reaching for that daily bullish order block and potential for the buy side liquidity up here. So that's everything on dollar. Hope that was insightful. Let's now go to GBP and have a look. Now GBP's commitment of traders is suggesting bearishness. I'm not going to go through it again here, but it is suggesting that the commercials are bearish on GBP, meaning they're selling it. So with that in mind, that's again in line with dollar. Now we need to start looking for bearish PD arrays that we may want to trade into, and bullish PD arrays. Now let's go to actually I'm going to start on the monthly, and that's because if we are going to be trading higher, let me see. Actually, let's start on the weekly. Okay, so let's say that we do start trading higher to create the high of the week. The highest I'd like to see pound trade for me to remain bearish with pound is, let's extend lines to the right, is this midpoint of this wick here. And that's because it's the midpoint of this big bearish weekly order block as well, and this is again consequent encroachment of here. So there's 2 reasons I want to see price respect this level. If we traded through it, so let's say price traded aggressively through it and found, you know, support on this level, then that would mean that dollar would likely be finding resistance at that fair value gap, and I'd want to start seeing lower dollar and higher pound. But so long as this level is respected, I'm happy to remain bearish on pound. Now we have relative equal highs here, here, and here and here. We have relative equal highs, so pound may want to create the high of the week above this swing high and then start to move lower. So what I am going to do is I'm going to mark this out as well as a target for buy side liquidity that I may want to grab. we'll thicken it up, and I'll move the text to the right. I need to just change my templates so it's easier for me. But anyway, we have relative equal highs, buy side liquidity up there. So let's say it grabs that and we are bearish, then we'd like to see some kind of reversal on the Tuesday or Wednesday to push us lower and start running into sell side. Sell side, speaking of sell side, we have beautiful relative equal lows here, this low and this low. So price is going to want to target that. So we can put sell side liquidity here. Again, move this to the middle and to the right. So now we have buy side that I'd want to see get taken and sell side. If it says trade, if it can like not price can just trade straight to the sell side. Like it doesn't need to grab this buy side. However, you know, there's always some kind of manipulation in the week, so I wouldn't be surprised if price wanted to trade into that buy side before moving lower. Let me get this marked out as consequent encroachment on the weekly. Just so that we are aware when we drop down to the daily. Now the daily pound chart is disgusting, as you can see, not the best. There's these relative equal highs again. Price may want to grab those stops and move lower. Now there's not actually a clear PD array for us to trade into on the daily, which is quite interesting. We have this bearish order block up here, which may be a target, but generally speaking, it's not very clean in terms of, you know, imbalances that you may want to trade to. So let's go straight to the 4 hour. Again, we've been stuck in this disgusting consolidation, so I don't want to speak too much. But what you'll find is a beautiful 4 hour fair value gap lining up perfectly with this consequent encroachment. So seeing price trade up into this would not surprise, look at that, would not surprise me at all. In fact, this will be very high probability, assuming we are bearish, as in pound creates the high here and then wants to see lower pound for the rest of the week. But obviously we have to wait and see. So I'm only going to drop to the 4 hour on pound. I want Monday to trade first. You'll see there's a lot of news on pound as well this week, so we can expect some volatility. But and look at these relative equal lows. Like price is going to want to eat those for lunch, you know. So that's another thing to take note of. But yeah, I guess we're just going to have to see our Monday trades. And finally, we'll go to euro. It looks like I already have some markings out on euros. So let's start with the weekly. Now you'll see there's a slight fair value gap here on euro. Price may want to reach into that before trading lower, assuming we are bearish. Remember, this is all assuming we are bearish. I'm not saying we are, but because we'll have to see. And like I said, I have not used the commitment of traders yet. But regardless, we have a fair value gap up here that may want to get traded to. And then in terms of targets for low, for sell side, definitely this swing low here as a sell side target. And you're probably saying, why that sell side? Well, in ICT's classic 3 candle pattern, 1, 2, 3, we should start seeing expansion down into this candle. Like I'm looking for this low to get ran specifically, and then once we drop down to a lower time frame, we should be able to find an imbalance, and voila, we have a beautiful daily fair value gap here that I'd want to see get filled, assuming we are bearish. So let's make that orange. You'll also see this imbalance here as well on the daily. So price may want to fill that. So we may want to trade higher, running into this bearish order block on the daily as well. So I've got a lot of levels out here, but let's just get them all marked out. So we've got a daily fair value gap here. We've got a weekly fair value gap here. That price may want to, you know, grab stops from, and then we have a daily bearish order block here. And then obviously we have the sell side liquidity below here and the daily fair value gap. So again, I don't know how the week's going to pan out. Obviously we have to wait for Monday to trade, and then Tuesday wait for Monday to trade, and then Tuesday we should have a better understanding of how the week may want to plan out. If we are bearish, price realistically shouldn't return back to the order block right now. We should find it, you know, we should find it struggling to, if anything. So this weekly fair value gap is best we see how price treats it. It should act as resistance realistically, but we'll see. And then it'll be nice to start seeing if price can work its way down into this daily fair value gap below. So that's everything, guys. That's everything, assuming we are bearish and the commitment of traders, the way ICT taught, is correct. But I'm excited to find out how the week goes. And yeah, don't forget to smash subscribe, don't forget to like, and I'll catch you tomorrow in the next episode. Peace.